Hello, chart watchers, and welcome to this Monday, December 3rd, Market Watchers Live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we got another week of market action, and on the heels of a lot of buying last week, we saw a nice open this morning, but we are seeing pretty good reversals here. Currently, we got the Dow Jones Industrial Average up 163 points, the S&P 500 up nearly 16. The NASDAQ currently up 67. The Russell 2000 has gone red. It is now down 3 points. 10-year Treasury yield breaking below 3%, currently 2.997. Like to see a reversal at this point. Volatility with the huge gap up in the markets this morning. We saw volatility open down at 16. It has recovered off of that low, though. It is back up near 17. And again, that 16 level, I'm watching that pretty closely. We did hit it at the open. XLY and XLK leadership from these two aggressive areas today, but you can see both of these candles. They're both filled, and you can see trading near the lows of the day, even though they do both remain higher today by more than 1%. Energy also having a nice day, trying to move back up above recent highs, recent attempts at highs over the past 2-3 weeks. Energy also up more than 1% today. Within industry groups, gambling stocks really strong this morning. You can see up more than 4%. But struggling at that early November high, right around that 750 area. Autos getting a boost from the ceasefire between the U.S. and China. We'll talk about that in a minute. But we are off the earlier highs on the autos. And then among the Dow Jones Industrials, Nike is the best performer. But take a look at that candle off of an uptrend. That is a shooting star candle with a long tail above some resistance at 78. Wouldn't want to see Nike finish like that today, so we'll want to watch that throughout the balance of today. All right, Erin, it is December. We've got the NFL getting closer and closer to the playoffs, and yes. I think my teams are getting further and further away from the playoffs.
It's pretty nice living in Los Angeles since, for a change, we actually, number one, have an NFL team. Now we have two, and they're actually very good. But I see you're avoiding the subject. I believe that the Ducks beat the Capitals this weekend. I don't know. I think that was this weekend.
I know not what she speaks of.
We've been really good about no hockey, but I just had to. I mean, come on, our teams played. I had mentioned.
I didn't even know it. I hadn't. I kind of go through this thing where I'm into football and I kind of know a little bit about what's going on with hockey, but I don't really follow it that close. But then after the football season's over, then my attention turns.
Yeah, I think I might be a little unusual that hockey is my favorite sport as a woman.
That's cool.
But, yeah. I don't know. There's lots of us in the stands, so hard to say.
The season's just so long. There's so many games.
That's the best part.
No, but they take almost everybody in the playoffs, and the playoffs are the only thing that matters. It's just, I don't know. It just seems like a lot of time and games to just schedule, to get your playoff seating. And that seems like that's all you play for.
Yeah. Well, yes, because you're playing for the Stanley Cup. Nothing else matters. Nothing.
Okay.
So,
I
it's just very intense. I just love it. I don't know. It's fast paced, but yeah, I'm enjoying football too. I'm not going to lie. But enough of sports. I know that people get bored with that.
Yeah, we'll wrap that up. I will say though that the Rams, they were speculating, with the Rams hosting games now. The Saints lost last week, and they're talking about they still might be playing away games because the Rams don't get that much support at home, and they even speculated that if they played somebody that a team that's very widely followed like the Cowboys, there could be 70% Cowboy fans in the stadium for a home playoff.
I don't know. The Chargers maybe. Rams had, Monday Night Football. Was it Sunday? Monday night last week was that amazing high scoring game with the Rams in it. So, and the place, the Coliseum was going crazy. So they might become a little more popular now.
Yeah. No, we'll see. All right, what we got going today is a whole new week.
All right, I know this is terrible. We could do this all day. The upcoming schedule tomorrow for my workshop, I'm going to go over the monthly charts that went final last month, sort of a little bit of a summary of what I did Friday on my first Decision Point show. Gaddis Rose is going to be here Wednesday, followed by Bruce Frazier, Mr. Wyckoff, on Thursday. So should be great. Good show. And today it's going to be even better because it's Monday setup day. That's always fun. I actually feel pretty good about my setups, and I know we had a pretty good week actually last week, I think.
Yeah, you should feel really good about your setup. We'll talk about that in a little bit.
I'm not saying anything. Earnings spotlight will follow that. 10 and 10 to 1. Our first symbol is going to be IBM. And finally, we'll finish up with the sentiment update. So anyway, it should be a great show. Tom, let's go. We've got lots to do. I know I have a ton of upgrades, so let's just move through.
All right, sounds good. Well, first, let's get into the economic reports. We did have a few of those out this morning. You can see them on your screen there. November PMI manufacturing, just as expected, 55.3. Then we had the ISM manufacturing index come out hotter than expected, 59.3 versus 57.2. And then, of course, just another horrible report in the home construction area. October construction spending fell 0.1%. Market was expecting a rise of 0.4%. And when we take a look at the 10-year Treasury yield, I don't know, maybe the market is focused more on that construction spending report. But you can see after gapping up earlier today on the 10-year Treasury yield, moving up to about 3.04%, it has been a straight move down, kind of like the overall market. It seems like a lot of money rotating into the Treasury market, and even rotating a little bit more toward defense since the opening bell. We had a really nice pop in the equity markets early on. Saw a lot of strength in some of the key aggressive areas, but that has been waning throughout the day. And you can see it reflected here too, with the 10-year Treasury yield gapping up and now moving back down and currently below 3%. I want to see where this finishes. I don't like what's going on today, and I'm going to show you a chart that I think's definitely going to be worth watching as we get toward the end of the week and we get that non-farm payrolls report out later this week. But I know last week felt good. We had a nice rally, and this morning got some pretty good news with the U.S. and China, at least kind of a ceasefire kind of a thing as far as the trade war goes. But the action since the opening bell has not been strong, and you can see the 10-year Treasury yield is just one example of that. I'm going to go in now and take a look at, there were no earnings reports out this morning of any significance, so let's just jump into a couple of industry group charts that I thought looked kind of interesting off of the heels of the U.S. and China agreement. Essentially what they, if you haven't heard, essentially what they did is they agreed to kind of have a truce for the next 90 days. The U.S. was ready to increase those tariffs from 10% to 25%. On $200 billion worth of goods starting January 1st. They agreed to push it back 90 days. And it just gives the countries a little bit more time to try to figure out something and come to an agreement on the trade. But in the meantime, the market got a great reaction to it. A lot of buying last week. We had that big open earlier today. You can see here on the aerospace index, we had gotten up to about 1650, pretty close to the double top near 1675, but we were unable to sustain that move to the upside. We've pulled back. And if you look at Boeing, ticker symbol BA, you can see we were up to 370. Right now we're back at 360, or maybe we're up 369 and 369 even. So we've come back down $9, or at least at our low. Well, currently we're down about $9 off of that earlier high. And that 369 high was pretty close to that early November high in price resistance up there at about that 370 area. So I do think that Boeing, reversing, aerospace reversing, and there's others that have been doing the same thing. Let's take a look at the commercial trucks and vehicles, DJUSHR. Here you got the gap up, trying to get above this one reaction high back in mid-October, and we've got a black candle off of an uptrend. Don't want to see that continue into the close. More selling would likely suggest that a short-term top is in. Another area, this is in consumer discretionary, gambling stocks. I know Wynn Resorts was having a really strong day, and here you can see gambling stocks trading all the way up to 750, challenging the early November high. So far, unable to get through, but I do like the fact that after moving above the 20-day moving average last week, every time we pulled back, we held it. So it's starting to show some pretty good tendencies as far as maybe trending here, a new trend beginning to the upside. I'm watching that PPO, which is right at the center line. You can see it's been below the center line for the last several months. It is now looking to go positive, which I think would be a positive development. So as long as the gambling index can continue to hold on to that rising 20-day moving average, I think this is an area that seems to be reversing and could be traded on the long side. Auto parts, with the tariffs and all, maybe out of the way for at least a period of time. Got a nice pop earlier today. You can see that the reaction high early November, right near 450. Today's high 448. And so far, unable to sustain that move through either that resistance area or that declining 50-day moving average. And then finally, autos, the DJUS-AU, nice gap up. Now, we're talking about highs that we haven't seen since back in August. So it's a pretty good move here on the autos. I see a bull or a flagpole and then the flag. So a bull flag breakout would measure roughly another 35 points from the breakout level around 200. That'd be 235, which would take this group all the way back up near that June high that we saw. So still potentially some more bullishness ahead for the autos. And I definitely think this is a group that will benefit from some of those trade talks and tariffs toning down a bit. All right. There was one stock that was one of the top performers today. I wanted to mention it, INCY. This is Insight. You can see today it's up 6%. And the reason I mention it, back on an article I wrote in, I think it was Tuesday of last week, under historical tendencies, I just mentioned that Insight Corp has a very strong track record between November and January. And of course, we've got November behind us, and you can see kind of where we were at the end of October. We started to make a move in November, pulled back. We were starting to rally going into Tuesday. If we pull up this chart, you'll see we had pulled back last week, kind of going against the market to the downside. But today, really nice move, more than 6% today. And I wanted to just show you the seasonality on this particular stock, because November, December, and January, when we look back over the last 20 years, look at these average gains, 7.3%, 8.3%, and 7%. So if you add those three up going across there, you get 22.6% is the average gain over the last 20 years for INCY during this time of the year. And here, again, you can see at the end of October, it started to strengthen. But if we could get a breakout, you've got some overhead resistance around 70. But INCY, knowing that you've got that historical tailwind, let's watch technically to see if the stock can make a breakout. The PPO looks pretty good coming off the center line, just starting to strengthen. So a breakout, I think, would be a very bullish development. Now I'm going to go back into the blog for a second. And I wanted to go into my blog from this morning. So let's take a look at this. I just want to go quickly over this. I don't know if you had a chance to take a look at this, but this was a very interesting chart under the current outlook area or section of this report. And what I did is at the top, this is a 30-year chart on the S&P 500. Down below, if you type in $employ, EMPLOY, you get the employment numbers. And so the employment numbers are plotted on the chart with the pink line and these black back and forth lines here that you see. This is a 12-week rate of change on non-farm payrolls. And the last two bear markets, you can see that we were really strong. This number was continually rising. And then you notice how we started to get a little slower pace of growth. That's the rate of change slowing, and you can see it in terms of the rate of change dropping here and eventually going below the zero line. Well, that rate of change began to slow early in 2000, right about the time the market topped. And if you fast forward to 2007, you can see the same thing. The jobs were going much faster, and then the rate of change began to slow. And you can see that in terms of these black lines dropping, and also the fact that the pink line was not going up at that same rate. And once again, that was right at the top, right before a bear market. Right now, I'm not seeing anything like that. And if you're looking at a recession, if we're going to have a bear market, we're likely to have a recession. If we're going to have a recession, we're going to need to have a slowdown in jobs. And so far, this line continues to move higher. And that's one of the reasons why I want to really pay attention this week to that non-farm payrolls report, something to at least keep an eye on and think about as we move forward in this, debate back and forth, whether or not this is the start of a bear market or whether this is just a correction in a 10-year bull market. But Erin, what do you have? No, we got some upgrades, downgrades. What you got today?
All right, let's get to it. I do have a number of upgrades. There weren't so many downgrades, but I thought there were a lot more interesting upgrades. So let's take a peek. All right, I'm actually going to start with Caterpillar. This one was upgraded today. Let's see, who upgraded it was B of A from a neutral to a buy. So I took a look at this chart, and what I noticed, of course, is we got a gap up and a breakout above short-term overhead resistance. But I went ahead and used our auto support and resistance line, and what you'll find a lot of time is when you line it up with short-term resistance or now support in this case, you'll usually be able to go back and see how that level actually was, if anything, a psychological level. So when we pass up above that, it's a really good breakout. I really like it. However, I'm seeing some resistance here that is a possibility. I mean, just something to keep an eye on. But with a really strong PMO, it's getting ready to hit positive territory. Look at the scooter making a move. Looks pretty good for Caterpillar, actually. And First Solar was upgraded today by Goldman from a sell to a neutral. This chart looks very similar, in my opinion. So you have this consolidation area, this area that we got that little gap. You can see it here, a little gap and a breakout, but we're now close to overhead resistance, and I matched it here with that a little bit more intermediate but short-term overhead resistance, and I brought it back and I found it did match up here with that July low and these lows in September. So somewhat interesting there. So I would be watching the 47.50 level. Noodles and Company was also upgraded today by RBC. Capital sector performed to outperform today. Certainly not the best looking PMO I've ever seen. However, you can see that typically the range is going to be, let's see, about 7.5 to minus 7.5. So keep that in mind. Even though this looks very oversold, technically it really isn't. And I go and just take this a little bit further out. I suspect we'll see that the range is 7.5 to minus 7.5. And I don't know, I would say maybe 5 to negative 5. So this could be an issue here because typically we do see a lot of bottoms here, but I think it could absorb a little bit more on the downside. So what I would be paying attention to obviously is whether it can get over that $9 range, that $9 level of overhead resistance. I suspect given the PMO, I don't think that we're going to be able to do that. Roku was upgraded today by D.A. Davidson from a neutral to a buy. I'm not so sure I'd be buying this, but you know what? We did get that breakout above short-term declining tops line, but we are getting ready to hit some what I would consider some short-term overhead resistance at that top we had here back in November. And the next level, if we can get above that, and the PMO looks decent enough to get the breakout. The momentum, I think, might be strong enough to push it to that overhead resistance level, but I'm not so sure it'll be able to close that gap. We'll have to see what happens if the OBV improves and if hopefully the stock chart's technical rank improves. AT&T was upgraded by JP Morgan from a neutral to an overweight. Nice little breakout, short-term breakout. Next level, I would say, of resistance is right around $33. Matches up. I could probably have made this a thick zone, but you can see it sort of matches up with this this low here and over here. And again, lots of touches. The more you have as far as touches, the better and more strong or the stronger that resistance or support typically is. All right, you've got the buy signal, and you can see that OBV is looking pretty good here on AT&T. So I'd be looking, honestly, for a move to the upside to about $33. So I'd say JP Morgan got this one right as a move to an overweight. All right, time for some downgrades. Verizon Communications is the only one I'm going to show you here. Really ugly looking chart, in my opinion, one you needed to see. You can see we broke down below short-term support, below the 20-day EMA. We haven't done that since October, getting ready to head down and test the 50-day EMA. Now that is held, obviously, that 50-day EMA, but we didn't have quite the ugly PMO that we have now. Notice when they hit and touched that 50-day EMA, we had, somewhat oversold or more neutral PMO with plenty of room to the upside. And now what do we have? We have a negative crossover PMO sell signal. So I'm not liking Verizon. All right, so that's it for our upgrades and downgrades. Here is our summary. There were a couple of upgrades that I did not cover, and that would be for solar, FSLR, Black & Decker, SWK. And the other downgrades I didn't cover, we had American Tower, AMT was downgraded, Costco was downgraded, Dick's Sporting Goods was downgraded, Steve Madden, and Tractor Supply all downgraded today. So quite a few downgrades. I liked looking at the upgrades, though. Those charts were certainly nice to look at. Those other downgrades, I can tell you, not good charts. So anyway, Tom, let's move on to the Monday setups.
Yeah, I did see one of your upgrades, other upgrades, AVGO. I think they report later this week. I think their earnings come out maybe on Thursday or something like that. I think I saw. So if you're holding that one, you might want to just at least be aware that earnings are coming up.
Yes, exactly. All righty. So let's see. I'm going to steal the screen so we can look at my Monday setup.
Yeah, I don't blame you. We might just look at that for the next 15 minutes.
Okay. So let's see. We had, I had Wayfair and let's see, HIIQ. So I'm going to steal this. And actually, let's call up yours first. Why not?
Sure.
You weren't negative, right? Were you negative for the week?
No. It was, I mean, well, it started off pretty weak, but it's a very volatile stock, but it came roaring back. Actually, 20-day moving average from underneath. If I was in it at this point, I would be selling it. I don't like that reversal at the 20-day. I think it'll probably go back down and test that recent low. But yeah, it had a really nice week. Any other week, I think, I'd be sitting pretty as we look at our picks from last week, but not this week.
Yeah. And I mean, I see what you're saying too. You can see the PMO is already turning over, even though this looks like a rising trend. So I totally agree with you. All right. Mine, let's see. I know I have it here in my Monday setups. Let's look at Wayfair. Whoops. I'm going to do it right here. All right. So I've got it at 90.25 and we're at 107.28. So yeah, this one turned out to be pretty good. The reasoning, of course, I saw that PMO that was scooping up in oversold territory. I saw the breakout from this declining tops trend line. And we didn't have that 520-day EMA crossover as of yet, but the 5-day EMA was heading that direction and price was staying above it. So that was pretty much why I picked it. And you can see the volume just really started to come in here. I would maybe watch this if you have a short-term trade, if you wanted to maybe sell about half of it if we got to that 115 level, just because there's a little bit of resistance here. So you could lock in some of that profit, but still ride a little higher. That's probably what I would do with Wayfair right now. If you're not in, I don't know that I would get in just yet. I'd want to wait till it pull back to that $100 range.
Any other week I had a stock that was up 4% in the week, I'd be pretty excited, but it pales in comparison to about a 19% winner.
Yeah. Yeah, I guess if you look at the weekly chart here, yeah, I have to take it back a week. But anyway, yeah, I think you're right. I think it was like 19%. And let's face it, our regular viewers know that my picks don't always turn out that way. And you have some great ones that do the same thing. So I just don't want any new listeners to think I'm just this brilliant stock picker, because I don't think I am. All right, so let's start with what I have this week for you. All right, first one, Dollar General. What was interesting today, I do want to mention, is that when I ran my technical scan, I did come up with only 11 choices. My general PMO scan, you can get that. It's in the Market Watchers Live recap at the bottom of every one of the recaps. But I ran it and I only got 11 returns. And usually that worries me. But when I looked at the 11 charts, I was really impressed. I was looking at 7 of the 11 as possibilities. I ended up taking one off because the PMO started to move the wrong direction. But pretty good week, I thought. So you can see this one, we have the PMO rising. You can see we got the volume on the OBV. We're already strong. We're already sitting above the 75 line. So we know there's some internal and relative strength. And you can see right here, we got a breakout above that 112.50. Now we have pulled back. So that is something to consider. You know, if we pull back, if we can hold the 20, I think that would be pretty good. But you know, that's why I didn't pick it, because I think it's still vulnerable to fall backwards just by the way it's trading today. Gas log was another one, GLOG. And this one is an industrial marine transportation. Nice setup here with the PMO. It did turn up above the 0 line, which means it does have internal strength. We're getting ready to get the buy signal at right here. You can see it right in the thumbnail. But I didn't pick it because it's butting up against this short-term resistance / support from back here. And, you know, since we only get to hold them for a week, I didn't think the setup looked quite as tasty as the one I ended up picking. National Instruments Corp was my second choice. I almost made this my pick, but the only reason I did not was I noticed that today the PMO is starting to kind of, you know, it looked really good this morning, but it started to sort of peter out its momentum to the upside. So I ended up making not choosing this one, but I still think it's a good one. You can see that this is our support level that we want to hold, or I should say resistance that we broke out of, but now we want to hold that $49 level. Currently, we're trading just under that. So I think we will probably break above that $49 level. I mean, obviously, we have intraday the last 3 trading days. So just watch. We got that breakout above that declining tops trend line. So I thought that looked pretty good. So that was my second choice. So I think this one could still be good, but I'm just a little leery of that PMO flattening just a little bit. New York Times Company was another one I was looking at. Got a short-term breakout above that $27 level. Of course, right now, like I said, we've moved back down and we're trading below that. I'd like to see a close above that level before I would get in it. As far as an intermediate term trade, I think you could give it a shot right now and set a pretty tight stop if you'd like, because we did it, like I said, intraday, get above that $27 level. We got above it Friday, it looks like, and now today. And the PMO still looks pretty healthy. All righty. Ollie's Bargain Outlet Holdings. And this one, again, nice PMO in oversold territory, near-term oversold territory. Don't have the buy signal yet. Very strong scooter. You know, the volume is a little unimpressive, but I think if you look in the thumbnail, you can make a case for a short-term flag formation here. And we are holding that 20-day EMA. So if we get the breakout above 91, I think this one could be very interesting and make a move all the way up here to that September high, which is, of course, looks like at about $96. So I think this one has some pretty good upside potential. But in the short term, I didn't pick it just because I haven't seen a breakout above 91. And that leaves us to my pick. And this is the one I'm going to take. And oh, darn, it's actually already risen. I don't get to take that $16.19 buy, but that's where I would have gotten in. My target is up here, a breakout above all-time highs, but I'm looking at just, you know, if I get to 1775, that would be my reevaluation point. I would set a stop, you know, short-term or intermediate term, right here to just below the $15 level, because I think 15 is a pretty obvious level of support. And so you might see a lot of panic selling right around that. So you want to kind of set yourself up for that extra little dip below what everybody else is looking at as far as support. So that's why I usually set my stop a little below that. And yeah, OBV looks good. Scooter looks good. So this is my pick. And actually, I'm going to I could be taking a chance here. This could be a risk. No, $16.30 is what I will take.
Okay, so there you have your pick for this week. You got you got a bar raised really high after your Wayfair pick, so you got to get 20% this week, or it's a
Yeah,
disappointment.
I would be happy with a fraction of that. I
Yeah,
think most of us would be on a trade. That
yeah,
it's always nice to walk into one of those. I think my other one that I would just say overall in the intermediate term is the healthcare sector. I did write about that in Chart Watchers, so you might want to check that article out.
yeah, I kind of like it too. I like the healthcare for a couple of reasons. I talked about the seasonality last week and the fact that healthcare outperforms on a, over the last 20 years, it's been the best performing sector in December and January.
Mm,
So got seasonality going for you. And then if the market were to turn back down, you got a lot of components within healthcare that are defense or more defensive oriented, more just safety, like the pharmas, bigger dividend payers. They just broke out to all-time highs last week. So there's a lot of good stuff going on there. Well, let me go
yeah.
ahead and I'm going to go through my list for you. And the first one is CMS Energy. This is not my pick. I'm going to go kind of a little out of order today. But CMS Energy, I'm going to give you 4 breakouts and then 4 stocks I like on pullbacks. Here's a breakout. The stock made a nice move, closed at a new high on Friday, pulled back, and has certainly reversed off of those earlier lows. I think it looks pretty good. PPO continues to strengthen. 20-day test would probably be best entry if we were to pull back to that level. But I like this as a breakout. INTC, Intel. Intel really had been struggling for quite some time to get through $49. We closed there on Friday. Notice the volume picked up on Intel there as well. We had a nice gap up with the overall market. And even though the market's pulled back quite a bit, you can see Intel still holding on essentially where it opened today. And I do like the PPO here picking up as well. So I think you got a nice breakout here on Intel. Could lead to some additional gains. Yum Brands, YUM. I like the stock. I want to see what the candle looks like. I mean, I could pick this one. I'm a little nervous about the jobs report coming out on Friday. And like Erin mentioned, we have to hold these for a week. So we got to hold it through next Monday. And that just makes me a little bit nervous. I like the stock. I like the setup. I like the group. I just am worried about the market because it's already made such a big run. You can see Yum was down at about 86 a little over a week ago and went over 93 today. So just a little profit taking maybe down to the 20-day could really hurt me in the short term. So I'm going to pass on Yum, but I do like the breakout. I think ultimately this one goes higher. VMware, outside of today's candle, I would pick this one. And I can show you multiple reasons why. Obviously, you got the breakout. Look at the volume coming in on Friday on the breakout. If I pull up a weekly chart, I think you'll pretty easily see equal highs coming across here, a little above 160, rising lows. I think you got a beautiful ascending triangle off of an uptrend, which to me suggests that we are going to go higher on VMware. But again, if we go back to that daily, if we finish like we are right now with this candle, I would expect maybe a little short-term weakness. VMware back down in the mid 150s, 155, 156, I think would be a great entry into the stock. Now I'm going to look at some that have been pulling back. KTOS, this is Kratos Defense and Security Solutions. Stock came back today to 1324, currently at 1336. This is the gap up with earnings. You can see the gap up that day was a little over 1350. The tail that day came down to 1311. And I think it was either on Friday, one of these lows, I think it was Friday's low, came down to 1310, which was 1 cent below that low and started to reverse. Wouldn't be surprised to see a move higher in KTOS. So this is one that I like. I thought about this one being my pick, but the defense group, if I go to a relative chart, you'll see here on a relative basis, the stock is doing really well relative to the group. But look at the group itself, near a 52-week low. So it's just the group that's keeping me from picking this one. But I'm going to go into a couple of healthcare stocks in just a second. But let's take a look first at Outfront Media, OUT. We could battle media stocks. I know Erin went with Quinn Street. I could go Outfront and maybe have a little battle within the same group, but I'm not going to. I do like the move up, though. Big volume, sideways consolidation, really good support short term around 20 and a quarter. Short-term resistance going to be around 21.50. This is a stock that doesn't move a lot. So at least it does offer maybe a little bit of safety in the fact that it just hasn't had a history of moving very fast in either direction. But let's keep going. Last two, HZNP, and then I'll give you my pick for this week. I like Horizon Pharma. Again, talked about the pharmas earlier. I think this is a nice stock because it didn't participate last week, and it is starting to participate this week. And if the market is topping and we roll back over, I wouldn't be surprised to see this pharma maybe make another run back up toward 22, 22 and a half as money rotates more into safer areas. But I'm going to go with WMGI. And I think I picked this one a few months ago for this contest. WMGI has been struggling since it gapped up with earnings, very strong earnings, got up over 30 and a half, has pulled all the way back down now, currently at 27.72. So I'm going to go with 27.72 as my entry. But it has completely filled this gap right here, back down to well, I can tell you what the gap level is. But I'm getting this one pretty close to a level I like, 27.73. So literally 1 penny below gap support. I'm going to go ahead and take a shot with this one, hold it over the next week, see if we get a little rally, maybe back up 29, 29 and a half. If I'm lucky, maybe even back up over 30. But again, this is in that healthcare space. If we pull up the relative chart, you will see that this is part of the medical equipment group that just made a double top breakout. So it's in a strong group. On a relative basis, it is weakened just over the last week or so. Prior to that, though, you've got a really strong stock versus the medical equipment group. So I think it could hold here on its gap support and make a run higher. So I like WMGI. That's what I'll go with. And here is our summary for this week. On the Monday setups, Erin goes with QNST 1630. I've got WMGI 2772, and there are the other stocks that we discussed.
There we are.
Good luck trying to beat that 19% winner.
Yeah, I'm not so sure I can, but boy, wouldn't it be great if I did?
Yeah, if you could do that, you wouldn't have to do this for very long if you could
get. If I could pick like that all the time.
If you could get 19% a week for, maybe 6 months, I think you'd be done. I think you could just retire.
No, because I love this too much.
Okay.
So everybody asked me, well, you're going to have to retire. And I'm like, I don't have to, as long as I can write and talk.
Good point.
I'm happy to keep this going. I love this.
All right, well, let's move on. We got Earnings Spotlight. This Earnings Spotlight is brought to you by earningsbeats.com. Earningsbeats.com provides high reward to low-risk trading candidates, and they'll teach you to focus on the combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com, better timing, better trades. And John Hopkins, I wrote about this over the weekend in Chart Watchers.
Yeah.
A combination of fundamentals and technicals, and we had Mark Chaikin on the other day. He's talked about the same thing. How
really?
Combine the both.
He's been listening to us.
He's been doing it longer than us. I'd like to think that was the case.
Right.
Maybe
come on.
I don't know.
Yeah.
Yeah. Well, so how you doing?
I'm doing pretty good. I heard
holidays.
Erin, I heard the smackdown of the Capitals earlier.
Yeah.
That's all right. All I can say is go, look up who's got the Stanley Cup.
Oh,
possession.
Yes.
It'll
be ours soon enough. We're in first place.
I might have to separate you two. Let's get back to football.
Oh, yeah. Oh, yeah. No, please.
Sure.
Not that.
Yeah. Aaron's like, okay, let's talk Rams.
Yeah.
Sure. Yeah, I'm not talking Redskins.
I got nothing to come back with. I'm a Lions fan. I just got nothing.
Yeah, I know, by the way, the Rams beat your Lions this weekend, too.
Oh, I know. Believe me.
That was nice. I didn't say anything.
I did it for you.
Thank you.
I'm forecasting
All right, I'll leave you two to.
I'm forecasting a championship for the Lions in about 2034. I charted it out.
I don't think they have a prayer. You're not giving them enough time.
Probably true. Anyhow, so this is.
No, I was just going to say, how about a Super Bowl? Detroit Lions, Buffalo Bills.
Okay, done.
The Bills haven't done anything since Jim Kelly was there back in the 90s. I don't think they've been in the play. I think they have the longest streak right now in the NFL, not being in the playoffs. I don't know. It's been like 16, 17 years or something, maybe longer than that.
I know it.
Anyway. Yeah. All right. Well, let's talk about the market a little bit. And, we've kind of gotten through earnings season. And I know you and I had a conversation about, Chart Watchers. And I do want to certainly suggest to everybody that if you are not a subscriber to Chart Watchers, you should become one.
Absolutely.
New Year's resolution. Maybe do it before the new year. But here is on our blogs page, blog articles page, over here on the right-hand side. This is a free newsletter You put in your email address, you sign up. You're not going to get spammed. Every 2 weeks, or I guess it's first and third Saturdays of the month, you will get a free newsletter. And let me just show you some of the articles that we had from just this past weekend. There was mine. We're going to talk about this in just a second, John.
Yep.
But Erin was talking earlier about healthcare, and I talked about the relative strength of healthcare in January and December. And there's a nice article there talking about how that group is bullish in three different time frames. You've got Greg Schnell talking about the big name pharmas. So all this stuff's pretty timely. You know, Arthur always giving great information. John, you posted your article. John Murphy talking about the short-term trend improving, and then of course Julius getting in there talking about the RRG charts, which are pretty impressive as well.
Yeah, and you know, our articles, when you think about it, were somewhat similar. We do them separately, obviously.
Yeah.
But the whole idea is talking about companies that report, you know, strong earnings and how they can really hold up in a market. You know, we don't have to get into these stocks, but these are well-known stocks. You know, if you took a look at McDonald's or Microsoft, for example, and you think McDonald's, you know, at its all-time high and Microsoft near it, you know, compared a little bit down today, that's fine. But just how well they've held up. And another one I pointed to was TTD, Trade Desk.
Yep.
I mean, these are, you know, look with how the market's struggling. These are really, you know, breaking out, you know, very nicely. And even when the market's down, Tom, down and out, which gets me to your article, I think traders, you know, are finally realizing that companies that report strong earnings are the ones that are going to hold up no matter the market. And a couple you talked about in particular, one was SEND.
Yeah. Yeah. At the top of my article, before we even get into it, I'll just show you that Facebook, you know, this was a company that came in and warned not just about the current, you know, the upcoming quarter, but they basically, on this candle, they were trading at an all-time high, and they came out and told Wall Street that they were cutting their operating margins from, or that their future operating margins, which Wall Street was expecting was going to be 45%, they were cutting them to 35%. I mean, that's not 45% to 44%. That's 45 to 35%.
Yeah.
That's a huge change in the valuation of the company. And you can see the stock went down $41 that day, 20%, but it hasn't stopped. And my belief is that these companies that don't, you know, that come out with these bombs on Wall Street, where Wall Street has no idea that this is, you know, that this type of change in valuation is going to take place. I think Wall Street throws these stocks to the side. I think these companies, it takes a long time for them to rebuild the trust and confidence for Wall Street to get behind these management teams. And you can see it with Facebook. I know the market rebounded recently. I mean, we got a little bit of a rebound last week in Facebook, but this is an ugly chart. And I think it's going to continue to go lower. I think I said a long time ago, right after the report came out, I said Facebook would not shock me if it goes to 100.
Yeah.
It hit 130 last week or 2 weeks ago. And it's not far from 100. I still think it could get there.
Yeah, because the market, you know, you make a really great point, because we always focus on companies that beat earnings, but companies that miss earnings, the only way, let's say the only way, Tom, but really one of the only ways you can really recover is if some dramatic news comes out between when you report it and your next quarter, okay? Because people are saying, holy smoke, if they missed what's going to happen next quarter. So if you're sitting there holding the stock and you think, well, you know, I hope that'll recover over the quarter, and they come out with another bomb, it's just going to be worse. So instead of trying to chase, you know, people look at Facebook and say, boy, it's down so substantially, I'm going to get on a bounce here. But that's not what traders are looking for. The astute traders are looking for the companies that beat expectations, pull back, like the ones you had in your article. And I do want to point out, we had a webinar back in November. And during that webinar, you came in, and I think you came up with 10 stocks that looked really good to you. And if you took a look at those 10 stocks and what they've done relative to the S&P, I think they beat it. I think it's like a 4 or 5 times multiple.
Yeah, and I mean, I was just arguing for the case for trading stocks that have beaten Wall Street estimates. And, you know, with a company like Facebook, when they miss, even if they come back and they say, well, next quarter, we're going to do a lot better, you got to sit back and say, well, can I trust that? Just, you just dropped a bombshell on us. Now you're saying it'll be better next quarter, but I don't know if I can trust that. I would rather have a company that comes out and that matches or especially beats expectations, have them lower guidance going forward. I would prefer that than a company that misses wildly and then comes out and says we're going to be much better. Because the one that lowers their guidance, I'm thinking, okay, well, you guided Wall Street higher in the last quarter and you beat your estimates. Now you're warning about next quarter. I can kind of trust that. I might even believe that you're going to beat those lowered expectations because you're on top of your numbers and your business model.
Yeah.
So anyhow, a couple of these companies, and I'll go over them real quick, but Send was one of them that I talked about on November 19th. And the whole idea, again, when you get these companies come out with great earnings, you get these huge gap ups. Look at what happens if you jump in at the end of that day and you buy it $46, $47. 2 weeks later, the stock is down $34, $35. And I tell you what, I've done this before, and I think everybody watching the show has done this before, where you buy a stock, it looks like it's great, and then all of a sudden, a week or two, you're holding it, and you're thinking, what in the heck happened here? Well, I got away from chasing stocks a long time ago. And so I recognize this is a very bullish move, great report. This is a stock I might want to own. I just don't want to chase it. So I put it on a chart list. Well, on November 30th, when we talked about it, here is where it had closed. And what I had mentioned there was that we had some upcoming price support that was prior resistance at 37. We had the gap support down around 34. And as it was moving lower, now you've got a target way up here at 46, 47, and you can keep a stop fairly tight to the downside. But here, Send gap down. This was November 20th, a gap down. And look at what it did over the last 2 weeks. Now, I'm not going to try to say that this is what you see every week or two. I mean, we went over setups, and Erin had a wonderful setup this past week with Wayfair. And you wish you could do that every single time. I'm not suggesting that Send is typical. Stocks go up 20% in 2 weeks, but I do think that it's typical for these stocks to outperform the S&P 500. And what you mentioned, John, was right. I mean, the S&P 500 since that November 19th close up through Friday's close, the 30th, I think the S&P was up like 2.5%.
Correct.
10 stocks that I mentioned at this webinar were up 9% on average. The other one was Twilio, which had a very similar looking chart. Big gap up. You don't want to chase. Comes all the way back down near gap support. And then boom, right back up to the upside. Really nice recovery.
I hear so many people talk about, when a stock gaps up like that, they worry they're going to miss the move. And invariably, Tom, I don't know at what point it'll happen, but it's, it would be rare that a stock just, continued ascending when it's gapped up that much. It almost always comes back to a resting place, almost always comes back to a key price or technical support level. And if you're patient, sometimes it can happen in a couple of days, sometimes it takes a month. But the whole idea is you're patient. You get to a point where maybe your downside risk is 2%, your upside risk is 10%. That's a 5-to-1 reward to risk. Those are the kind of stocks you want to look at.
Yep. And I'm going to take this one step further because last week when I did the earnings spotlight, I was looking at companies that were going to be reporting. And if you have any comments on these, I'd love to hear them. But here are 3 companies real quick that I'll go through. I'm going to pull them up on a relative ratio or, that relative chart that I like to use and just, make arguments that I think these are 3 companies. If I was looking at 3 companies, I don't like to hold into earnings, but I do think these are 3 companies that could have pretty good reports. One, I know, Erin, I think this was one of your Monday setups, but OLLI, Ollie's Bargain Outlet Holdings. I made a case that this was a better stock, at least recently. It's been a better stock than the Amazon among the broadline retailers. And you can see the stock not too far from its recent high. And as the whole group kept moving down, you can see that recently Ollie's was actually putting in relative highs versus its peers. And they report tomorrow. I think it's after the bell.
Okay.
So, I mean, this one could have fireworks. It could go either way. And I wouldn't be owning it, but I would not be surprised to see a really strong report coming out of this company after it's sideways consolidated here for the last couple of months.
One thing I'll say too, Tom, is that, some people like to hold stocks into earnings. If you're going to do that, just think about reducing your risk. If you normally own 500 shares, maybe you knock it down to 100, 150. You want to be in on the action? Go ahead, because if it comes out well, you'll still make a little bit of money. But if it gets slammed, and down 12%, you won't be depressed.
Well, you'll still be depressed. I would still be depressed.
Not as depressed.
Why did I hold into earnings? That's what
Not as depressed if you had 500.
Good point. Good point. All right, another one, OKTA. This one, I tell you what, this was one of the strongest software stocks in the market in 2018. And when they came out with their earnings back in September, look at that huge gap up from 60 to 70. Looked like couldn't go wrong. And then, of course, all the software stocks got hit starting in early October. This one was not immune. Although, look at it, went from 75 in September down to about 42 and change in November, 2 months later. Yeah. And, there's probably people at the company thinking, what the heck has changed?
Yeah.
Probably own stock in the company. But anyway, it's had a nice rally again. And we've seen some of these software companies. We saw Twilio, which I mentioned earlier. How about Workday, WDAY, which came out with a massive report in this software space. So I think this is another one that I wouldn't be surprised if the stock was up 15, 20% or down 15, 20% with its earnings coming up. And they come out Wednesday after the bell.
Yeah. Well, but what you just said, it could be up 15%, it could be down 15%.
Yep.
Flip the old coin, because what have we found time and again? Charts can help you maybe determine what might happen. But Tom, there are things going on internally. We have no idea. What if they say we're going to miss earnings by a penny? That doesn't sound like much, but when a stock is gone like this from 40 and change back to 85, it wouldn't take much.
65, but same principle.
Yeah, 65, right. I got to put the glasses on, but they're on. So
I got one more.
Okay.
Let's wrap up with this one, Alta. And I tell you what, if I had bought Alta when my daughter started using their products about 15 years ago, I would be doing the show from an island somewhere. Alta has been. Let me pull up the long-term monthly chart on this stock. I mean, talk about the stock. This was back. All right, so my daughter would have been, let's see, in 2008, 2009. That was what, 9 years? All right, so she'd have been 15, 16. So in that, teenage years, she was always going to Alta to get stuff. And I looked at this stock pretty much all the way through this entire rally.
Oh, sure.
Why didn't I buy the stock when she started talking about it? But anyway.
She was right.
Yes, she was. Sometimes your best ideas are really simple ones.
It goes to show you should always listen to Erin's, right?
Yes. There you go. There you go.
No comment.
Yeah.
Yep, she's still there.
Yep.
All right, so here's Alta. So Alta just, went to a new high, $320, pulled back, starting to go up again today, up 3.88%. They report on Thursday. Look at the specialty retailers dropping, even though just recently Alta was at its high. So you've got a stock that's really outperforming relative to its peers, relative to the S&P, and the group overall, just kind of going along for the ride with the S&P for the most part. But Alta's been a great performer. A lot of accumulation. This is another one. What in the heck is it going to do with earnings? My guess is they're going to go higher.
Okay.
Just a guess.
Yeah.
You want to guess, or you just want to not participate?
I think it goes higher.
Okay.
But I'm not going to be in it.
No, I won't either.
So I can brag if it does, and if it's not, I'm brilliant because I didn't hold it.
Yeah, if anyone out there listening gets in, we're going to erase this tape.
Right. Great.
Possible. This tape will self-destruct in 30 seconds.
Yeah. Yes.
Anyhow. All right. Well, it's great having you on here, my friend, always. And I see you one more time, I guess, before the holidays. You'll be back.
That's right. All right, my friend.
All right. Take care. All right. There were the stocks. Some of the stocks. Those were the key stocks that we went over, really. Sen, Twilio, TTD, Ali, OKTA, Alta. All of those are just wildly volatile stocks, Erin. And I know, during the sell-off, these stocks were getting absolutely crushed to the downside. But then as soon as you get a little bit of rally, they come roaring back because they've been leaders in the past and traders just gravitate to them.
Yep. I think it's a good thing to see this sort of a rally with these stocks, especially. Yeah,
we'll see whether or not we can hold it. I tell you, I still got concerns. I know, we had Mark Chaikin on last week. He was pretty bullish, saying he thought the bottom was in, and
I don't think
there,
so.
But I'm not quite all the way there. I've been trading on the long side, but holding my nose, if that makes sense.
Interesting. I've been selling into strength.
Well, I actually did sell a couple stocks on Friday, so I've been doing the same. But
Yeah, I
I
haven't
could be out of
purchased.
everything today.
I haven't purchased yet.
Well,
I think we're going to fail at that. Well, I'll talk about it later. I'll talk
yeah,
about it.
yeah. It's just one of these things where I think we got good news. Market had a really good week. We got good news today, and unless we rally into the close, and I don't know exactly where we are right now, but we're going to get into 10 and 10 in 1 second. But we got the Dow right now up 219, but the futures, we were up over 400. And, Russell 2000 up 5 points today. I don't know. Just,
Yes.
What do we got?
All right. Well, Amarin, looks like an interesting one. I suspect we'll be looking at that one just because it's such an outlier. And as far as our sectors go, it appears that healthcare is the one that people are interested in. And I say good for you, because I do think that's an area where if I were going to buy, that might be where I'd go. But I don't know about biotechs, but I think that would be an area I'd go.
Mm-hmm.
So let's start. Let's see. Our first one was going to be IBM.
All right, let's do it. IBM, I think we got some overhead resistance. I think we got problems here on IBM. The stock had been strengthening earlier in 2018. I thought maybe all the problems were behind it. But look at the volume pick back up in October. And this is more than just pulling back. I mean, we saw stocks like Twilio and some of those companies that were coming back down, but really just kind of filling gaps from prior earnings and things like that. IBM's broken down below a lot of lows from earlier in the year and did so with very heavy volume. Now it's trying to rally back up. I think 127 to 130 is going to pose some problems for the stock if it can get there. You can see the declining 50-day moving average, which hasn't been tested yet during this 2-month decline. That's right around the 130 level. I think that's going to be an issue. And if we're fortunate enough to get through there, I think you've got overhead gap resistance. Look at the gap from 143 down to 134, and look at the volume as it continued to sell off. I think if you manage to get through 130, I think we might be able to see that 134 area, but I doubt that we would go any higher than that. I'm not a big fan of IBM. I would pass on it personally.
All righty. Let's see. The most popular, there's actually there's a three-way tie, so we're going to look at all of them. But I know XBI was actually leading the popular requests most of the morning.
Yeah, biotechs, I am a fan of healthcare. I think if I were to trade, and that was my pick for the setups this week, I made it. I wanted to make sure it was in the healthcare space, just because healthcare kind of has those characteristics of being able to move higher in a risk-on environment, mostly because of biotechs. And you can see we're up here against the key resistance level. The PPO trying to get back through center line. And notice this is probably the most important thing. I know we've seen some strength recently, but this kind of strength is very normal in a downtrend when you've got lower prices and a higher PPO. My experience is to look for a 50-period test and a PPO centerline test, and we're just about there. So I think it's great that biotechs have rallied. We've made it all the way back up here on the XBI to 85 into this area, but I think it's got some work to do now to try to get through and to see that PPO cross the center line. So if I was in the XBI, I would probably take profits here, and let's see if we can get through.
All right. Let's see. Let's look at that outlier, Amarin.
Okay, AMRN. And that is also, is that a biotech?
Yeah, I think it is. Yes. No, pharmaceutical.
Pharma. Okay. It's healthcare stock, so that's good.
Yes.
I see like a symmetrical triangle here, actually. First of all, you got a strong group. You had a huge gap up on Amarin back in September. It kind of ran out of steam. I think it isn't going through a consolidation phase now. But if you look, I mean, the stock and its industry performing really well relative to the S&P 500. So I would maybe be looking to see if we can get a breakout of this symmetrical triangle. So if I'm going to draw a line here from these highs, and then I come up here from these lows, that's what I see off of an uptrend, a symmetrical triangle. I think a breakout above, say, 18.5, 19, I think would be very bullish, especially if the volume starts to kick back in. To the downside, I mean, maybe if we were to fail at this trend line, then I think it could bring this low that we saw maybe around 15 into play back here. But I'm going to stick with this symmetrical triangle here, and I would wait to see which way this breaks.
All right. See, next one I'm going to give you one of the popular ones that was requested, SMH.
All right. Well, you've got the semis ETF. Don't need the relative charts, so let's just look at the SMH. Well, first of all, Intel is certainly helping here. Nice gap up I showed earlier in the breakout on Intel is helping the semiconductors. Now, there's one thing that I really like about this chart, and I'm seeing a lot of mixed signals overall in the market. This is a bullish signal I'm seeing, and that is with the semis moving up this last time. Notice each time we pull back and it looks like we're going to fail at the 20-day, similar to what we did back in early November. We hold it and then we rally, and we've been rallying on highs, and now we've cleared the 50-day moving average. This is another one where the PPO is trying to crack through that centerline resistance area. We've gotten above the 50. I think as long as we continue to hold the 20-day moving average on pullbacks, I would be okay with the SMH. But if it fails, given what's going on in the overall market, and especially if we get a poor jobs report on Friday, I would be taking no chances. I would move to the sidelines here.
Okay. Let's see the next one, emerging markets, I think ETF, EEM.
All right, EEM. Okay, a couple of problems here. First, the good news. Good news is we're getting a nice breakout. The bad news is, and I'm going to just add a little window down here. I'll get rid of the RSI. And let's take a look at the EEM relative to the S&P 500. Now, well, let's make this a little bit bigger so we can actually see it. Okay, so here is the EEM, and it's starting to break out, but I'd like to see us get that relative breakout as well. The longer term, you can see the EEM has been downtrending relative to the S&P, and part of the problem with emerging markets is that the dollar has been strengthening. So anytime you got the dollar strengthening, many of these foreign ETFs are going to struggle on a relative basis, and that's what we've been seeing. So I like the breakout, the absolute breakout, but what I would be looking for next is to see if we can get a breakout on a relative basis, because, you know, the bottom line for me in trading is I want trades that are outperforming the S&P 500. So if you're in something that is relatively underperforming, you know, you got a relative downtrend in play, then I think that's a problem. But notice here, we had a reaction high here, and then just recently, once again at this level. I think if we could break out above that, I'd start to feel a little bit better about the EEM. Until then, I'd probably look elsewhere.
All righty, let's see. The next one is an interesting one I don't think we've ever looked at. It's our only technology stock requested, Form Factor, and the symbol is FORM, F-O-R-M.
Yeah, Form, let me get back over to this other chart. I really like Form, and I liked it, and this is a perfect example, another example of what I would have talked about in the Chart Watchers article. When you get these pullbacks, there's the key support area on Form. Here was your gap up with earnings, huge move. Don't chase. Look at this. We came back down and literally right before this move to the upside, tested the top of gap support, 13.5. So that's why I like to wait. Now the problem is we're up against key resistance, and so far we had a potential breakout earlier today, and I would, you know, maybe use the same thing. Probably would draw this line, this first resistance line at the close, and then the other one at the intraday high. So this is an area of resistance for me. Now, I think the PPO looks strong. So if this does fail, I don't think we'll go all the way back down to the bottom. I would expect a 20-day test. You can see we never had a close below the 20-day. So if this failure results in a pullback, maybe about 5-6%, I think we could get maybe back in at the rising 20-day, just above $15. I like it there.
Okay, excellent. Let's look at AOBC, American Outdoor Brands. It's our only industrial request.
All right, well, it's been working its way back, trying to test key gap support, the top of gap support. Here's another perfect example. And we bounced right off of it. So if those are the two key areas that you're using as support on this chart, well, you hit your support today. This would be obviously today's low would have been better than current price. But if you're trading this range, even at current price, I think the reward to risk looks pretty solid here. So I like the stock. This is where all the buyers came in back in August. I would expect to see some more strength here.
Okay, let's see. Comcast, CMCSA.
Well, good, really nice breakout here. And I'm going to pull up the relative chart because Comcast is in that broadcasting area, and you can see this area has been moving higher. So even though the S&P hasn't broken out above, say, September, October highs, this group did. So on a relative basis, you've got a group that is wildly outperforming the S&P 500. So that's the backdrop. Now, within that group, you've got a stock that's making a breakout. So I am okay. I'm fine with Comcast. I don't think it's one of your better performers within broadcast, but it's not bad. I think you got an uptrend in play. I would maybe watch the recent low. So let me annotate and just draw a support line in at that last low right there. And even maybe a little bit beneath that, you can see this gap right in here. I'm going to go to the bottom of that gap. So I'm going to say 36 to about 37.75 would be a key support area I'm watching. Somebody who wants to maybe keep a stop a little tighter could use the rising 20-day moving average. But it's in a good space. We've gotten a breakout. I'd like to see a little bit more volume on that breakout, maybe a little bit of concern there. But overall, it's in a good space. So I'm okay with Comcast.
All right. Let's see. Let's do this one for our friends in Canada. SLF.TO. And that is financial insurance.
XLF.TO.
It is SLF, yes, .TO.
S. Okay, I had X. Okay. SLF. Don't need the industry. Let's just go ahead and put this on a regular chart. Yeah, the downtrend, I think, remains in play. You can see some pretty good support that was in here. Let's call it 49 to 50. And now as we've been moving up, 49 to 50 is where we keep rolling over. So I'm not ready to jump in on this one just yet. I think I would pay attention to these. I mean, you've got gap support or gap resistance right here. We could move this line up to here. Actually, I'll just give you a couple of lines. And then the bottom of gap resistance right here. So you've got three really key areas of overhead resistance. And you can see we just keep struggling between 49 and 50 every time we get up here. We've also got the PPO, which is just getting back to the center line. So this one could roll over and begin to move lower again. I personally would avoid it until I can see it, especially with some volume coming in, maybe push back through $50. That would tell me maybe the worst is behind it. For now, I'm a little skeptical, so I would pass for now.
All righty. And our last one is going to be CSIQ, Canadian Solar. So I guess we'll help out our Canadian friends again.
Yeah, I wrote, I don't know, maybe a week or so ago about renewable energy potentially bottoming. And we saw, I think you talked about First Solar earlier with an upgrade. And you can see here Canadian Solar making a pretty big breakout here to the upside. It just seems like the overall downtrend ended. We sideways, consolidated in a base for a while. And you can also see that the volume on this breakout was not weak. I mean, that's a pretty nice level of volume to confirm this breakout to the upside. So what I see is price support down around 1540, and with a strong PPO, I would be also watching the 20-day moving average. I think those two levels will offer up great support on a pullback. I like the stock. I like the group beginning to strengthen. If it were to close back below $15 definitely the 50-day moving average, I would be out of it. But I think the group is bottomed, and I think we're moving higher here on CSIQ, so I like it.
Okay, and that does complete the 10 and 10. And here are the stocks that we just went over. And I will have those up for you in the Market Watchers Live recap in the blog. You'll find the link right there at the top of our blog page for the Market Watchers Live blog. Just go to that tab. All right, time for our final market update. So let's see what we have going right now. And there we go. All right, I'm going to refresh this just one more time since the 10 and 10. All right, markets are up today, so it's looking fairly decent as far as trading goes. Actually, Pretty good. We can see right now that the Dow Jones is up about 1% currently, 255 points. NASDAQ is up 1.7%. So tech is having a little bit better of a day than some of our large cap indexes in general. Mid caps doing well. You can see we've pulled back though to the intraday low here on the mid caps, and Russell 2000 though is doing fairly well. It's dipped right there below yesterday or Friday's close, but is starting to move up as we speak. Russell 2000 is up 0.59% currently. Canadian markets are currently up. We spent a little time here intraday, just the last couple hours in negative territory, but Canadian markets are currently up 12.27. Treasury yields still below that 3% level, reading 2.997%. VIX is lower on the day. Our current reading is 16.51. UUP is slightly lower. GLD gap up but moving sideways, currently reading 116.56. And USO big gap up, a pullback toward the support here at these tops from last week, and it did manage to bounce off of that. Currently, USO is up 3.91%. TLT is also up today, reading 115.36, and that's all I have. I'm going to pass it back to you, Tom.
Okay, let me show one chart, and this is a relative ratio that I like to follow. I always follow it. Anybody who's been following me for a while knows the XLY, XLP. I just like to see what's going on in the consumer space. We had a huge move up in the XLY versus XLP to support the market. It was one of the reasons why I wasn't buying into the bear market back in January. A bear market usually doesn't start with money rotating more towards consumer discretionary. But over the past few months, and some of this was to be expected, and I talked about this back when the ratio was at well over 2, that I wouldn't be surprised during a correction to see this move back down, and we have. But I would really be watching, say, 175, 180. You've got this trend line here that comes up into this area. A couple of prior highs back from many, many years ago. That was a kind of an overhead resistance area we broke through. And so I think coming back down and testing that level is something that I would pay attention to. If I annotate just one more thing here, and you notice back in 2016, this is why I got a little nervous beginning of 2016. We had a couple of tops here on a relative ratio. We broke out, we came back down, we tested them right at the beginning of 2016 when we were just about to break below price support on the S&P 500 back near when it was near 1800. We were starting to break down on this ratio, and that's why I started to turn somewhat cautious, very cautious about the market. I wasn't yet going bear market because we hadn't broken down on the S&P, but that made me nervous. This is kind of making me a little bit nervous, but I think it's somewhat to be expected. The question is, does it stop, and does the S&P 500 continue to hold on to that February support? So far, so good. We'll see. But let's get into the final segment, which is your sentiment. I'm not hearing anything, Erin.
Oh, I'm sorry. I've been talking and I'm muted. That's always a good thing, right? All right, here we go. All right, so today, this is the sentiment report for December 3rd. For those of you who are regular viewers of Market Watchers Live, you might be a little confused because we're doing the sentiment update on Monday instead of Friday. But now that we have a decision point show on Friday, I do that DP report that I normally did on Mondays. I do that now on Fridays at 2 p.m. So be sure and go catch that program. All right, so let's go ahead, though, and get into the sentiment update. I'm going to cover for you, these are the charts and the sentiment that I want to talk to you about. We'll look at the put-call ratios. We're going to look at the American Association of Individual Investors, AAII. We'll look at name exposure. We'll check out the RIDEX ratio and see where the money is actually flowing. I'll show you the Wall Street Sentiment Survey since we are doing this now on Mondays. That chart is final, so I'm going to show you that. We'll look at the VIX, and then finally I'll close it out with gold sentiment. So let's go ahead and get started here. All right, so Wall Street sentiment. Since that chart went fine, I'm just going to go ahead and cover that now. I do want to let you know that because I am doing this Monday, you are going to see some of these bars replicated. This is still the reading right here, not this being a second reading. These are the same reading, actually. Because they're weekly numbers, it's just how the system works. But I think it's pretty obvious. Wall Street sentiment is very bullish. So last Friday, when those of us were asked, we had 63% come in bullish. So what does that mean in the short term? Typically a decline. Typically that's bearish for the market in the very short term. So I'll be watching to see if we can continue with this rally that we have. All right, put call ratios. Right now we're seeing that they are rising and we're now above the even mark is what I would call it there, the equilibrium, which is 1 on that ratio. But we are rising out of this oversold low. We are not in oversold territory, in my opinion, as far as you can see these tops that have been running right here in that 0.85 area, 0.80. So we're not quite there. Still have some room to get more bullish at this point. So, you know, I'm waiting for it to hit those bullish extremes because remember, with sentiment, it is contrarian. So the more bullish people are, the more bearish that is for the market or whatever you're looking at in particular. All right. Here we go on to our AAII data. And again, you're seeing a double bar, just ignore it. That's the reading currently. What I wanted to point out is the fact that currently we do have more bears on the AAII reading. And this is a little bit lagging in the time frame because these numbers are given to us on Thursday after the close. So these are just a little bit stale, but not that much. So you can see certainly a lot of bears right now as far as the American Association of Individual Investors go. And we are slightly more bearish than, you know, even as far as our ratio here, our bull-bear ratio. So while, you know, we're looking at lots of bearish readings, which means it's typically bullish for the market, we really haven't hit some of the extremes. We could see it go lower, but typically when you get these low readings like that on the bull-bear ratio, it's positive for the market. So we want to see those readings either continue lower or we start to see the rally that we want to see based on the numbers. All right, this is the name exposure index, and I really like this chart and the data that we get from this. This is the National Association of American Active Investment Managers. Sorry about National Association of Active Investment Managers. So these are guys that and gals that manage a lot of money, and they're reporting to us how exposed they are to the market. And currently, their reading is higher, certainly, than what we got last time, which was a low for the, you know, since 2016. And that's very bullish for the market. And the next step up, so we've risen here in exposure in a sizable way. However, if you look at the line where this reading is and go across, you know, in the last 2 years, this was considered oversold territory. So I don't consider the increase in this reading to be especially that active managers are especially bullish because they've now increased their exposure. They're still not bullish enough to give us that, you know, to have us be looking for a decline. Right now, when you have these bearish readings of bearish sentiment, it's contrarian, so that's bullish for the market. And so actually we are at a reading that is in a quote unquote oversold territory. So it's still a very low reading for exposure, and that means everybody's very bearish. That is bullish for the market. All right, we looked at Wall Street sentiment. Let's skip on over. We're going to look at the RIDEX ratio right now. and the RIDEX cash flow. This is just, I absolutely love this. My father, Carl Swendling, came up with this idea of tracking assets in a group of funds. At the time, they were managed by a company called RIDEX. Guggenheim bought them out. And so although all of these funds still exist, but now they're under the Guggenheim name, but we keep RIDEX just because we called it the RIDEX ratio and everybody recognizes that. So what we do is RIDEX/Guggenheim. They report how many assets are in each of their funds in this basket of stocks that we have. We have bear index funds, there's money market assets, and there are the bull and sector funds assets. So they report them and we log them and we watch where the cash flow is going. And that can tell us a lot about the sentiment of the market, more so, in my opinion, than you get from your polls, the sentiment poll, where, hey, I'm feeling bullish, hey, I'm feeling bearish. Well, where's your money actually going? Well, here we go. So what we're seeing is we're getting some increase on the bear activity. We're not, we did see a bit of a pullback over the week, but you can still see it was an increase, slight increase. We have an increase in money market funds. So we're having bear funds and money market assets gaining right now. So what does that mean? That means investors are bearish and nervous, and so they're shorting. They're moving into these bear funds. But notice, like I said, over the last week, the bear funds didn't quite increase. We saw more money going to cash, less money going into equities, but look what's happening. We're finally starting to see them rise. We're seeing it since November 19th. We've had a pretty steady rise in assets for the bull funds. And I think that is, interesting in that, people are starting to feel a bit more bullish. But overall, when I look at this chart, I still see bearish sentiment because we still have a lot of assets in cash, and we still have money that is rotating and continuing to go into the RIDEX bear funds. And so that tells me that in general, investors are feeling more neutral to bearish. This is good. We're getting that steady rise, but as you can see, as far as assets go, this reading is still very low. So I wouldn't consider this as investors being, really bullish and to look at that contrarian. Right now, what I would look at is the fact that they seem very bearish, and that actually is good for the market, right? Because it's contrarian. We'll want to watch where the assets are flowing as far as these equity funds next week. If we're starting to see still a steady increase there, then I would be noting that investors are getting more bullish. But I can't say that because I'm seeing that increase in the bear funds and in the money market funds. All right, the VIX, what's going on here? Chart's actually interesting this week. What we're seeing is right now, currently, a penetration of that upper Bollinger Band, meaning we have very low VIX readings. Typically, when you get that punctuation, that penetration above that upper Bollinger Band, that usually will mark a decline, an area where we should expect a pullback or a decline, and it's pretty right on, I have to say. Actually, I didn't mark that one. That one we ended up with more neutral activity sideways. So, I guess you could say it's still activated as expected because it came in right about here. So right now we're looking at that penetration of the upper Bollinger Band today. So what does that tell me? We're going to get a pullback. And interestingly enough, where would it be arriving before we can even test this overhead resistance at what you could call a double bottom here? Mark Chaikin has called that, as Tom mentioned earlier. He's a very bright guy, obviously. But, obviously it's not a double bottom until you get the penetration above that confirmation line. So I really can't get excited about a double bottom right now, just because it's not really a double bottom yet until we get that breakout. And I just am not expecting it because we're seeing this penetration. We're seeing some of the sentiment pointing to some neutral activity, some bullishness. I could see it getting up to this area of resistance, but I'd be worried about it managing to come back down. And finally, we'll look at the gold sentiment. Currently, these are the high bearish readings. When you get the high discounts, that means that's considered bearish sentiment. And again, sentiment being contrarian, you want to expect when people are highly bearish, we're getting those discounts, that we would get a rally off of that. Well, as you can see, it took a little while, but we did get it off of that rise. It wasn't until we started seeing a pullback on the discounts that we started to see that sideways, that move to the upside and some sideways movement. But as far as gold goes, we're holding this level at 1220. I mean, our 1190, whatever you want to call it. We're holding that level mostly. And that's positive. And I think we probably will continue to do that unless we start seeing the market continue to rally. If we get that breakout above what is considered a confirmation line in the market and we start seeing a rally really take off, that we're not in a bear market, I would expect gold to falter, to have some problems. It's already showing some weakness. I have 2 PMO tops below the signal line. Not good. All right, so let's just cover, get a summary of what we did. Neutral to bearish or bullish as far as the put-call ratio goes. Bullish for the market as far as AAI goes. Name is, I would say, oversold readings, so that's actually bullish for the market right there. And the Wall Street Sentiment Survey, highly bullish. So in the short term, I think we have some bearish problems. And that would also line up with the fact that we have a VIX that is high, penetrating that upper Bollinger Band. Right-X ratio, I think we're really looking at neutral to somewhat bearish because we had that increase in the bear funds, but we're seeing an increase in the bull funds as well. And there's that VIX. And finally, as far as gold sentiment, we've got it elevated as far as bearishness discounts, so that's somewhat bullish. We got that second top below the signal line, which is bearish on the PMO for gold. So I'm a little, I'm cautious right now as far as gold. So that's all I have for today's sentiment update. Time to close the show, Tom.
It is. We got our poll.
Oh, yes. We'll be running it on Mondays now. The thing is, I just have to say, is that, for the survey, you don't usually get to cheat by having Mondays trading. But I have to say, after today's trading, I could see why everybody would be very bullish. But we're getting ready to test what I would call that confirmation line of that double bottom. To me, how you were saying you'd want to see the drop below, I think, 2,500 for a bear market. I'd want to see a breakout above that confirmation line before I could say that we're not in a bear market. So we'll see what happens when we get there. So as far as this week goes, I'm going to say lower just because even though, I'm 1% behind already, I would just say on Friday, that's how I answered. And I still am behind that. That lower to mostly unchanged, I'm sort of in there. What about you?
Well, I am going to say I got a couple of things that are bothering me about the action this week, about what could happen later this week. But I'm gonna go bullish through Thursday or Friday. Well, through Thursday. I'm a little nervous about the non-farm payrolls coming out on Friday, to be honest.
Yeah.
Initial jobless claims were higher, I think, the last 2 weeks, maybe the last 3, I can't recall. So we'll see what happens with that on Thursday. We got ADP employment on Wednesday. And, today we had a big news with the trade. We got a big pop after a big rally last week. There are definitely some, if we finish week today, we could leave some reversing candles. Things to worry about, but I'm going to say bullish.
All right. There we go.
All right. It is time to wrap it up. I do want to thank everybody for joining us today, and John Hopkins, for sure, coming in and joining us on the Earnings Spotlight. Please remember to complete the survey as you exit. We love to get your feedback, to hear what you think of Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. We'll see you back here tomorrow. Happy trading.